Hey everyone, Couch Investor back to another video for today. We're back with a quick checkup on Enphase. Now, I did a video about Enphase about a month ago. You'll see a small clip at the end of this video when we're going to look at the graph where the prediction actually played out. Now, I want to start with one of their competitors, with another player in that field, which is SolarEdge. So we had some comments earlier in August from Bank of America, so they downgraded the stock to neutral from buy with a $181 price target, cut from $320. Now, they say here after recent checks with installers and distributors, the analyst is growing incrementally bearish on the medium-term component sales outlook. Continues by saying SolarEdge is caught in a choppy sector backdrop. There is demand slowdown, higher interest rates, and softer power prices in the European Union, residential and commercial and industrial markets due to channel inventory glut. We've heard that with Enphase as well, and where component constraints and critical end markets exacerbate competitive pressures, the analyst wrote. To which I'll continue to talk here on the cutting prices, which they are not doing right now. The CFO said here we see us growing 30 to 40% in Europe depending on countries and not by 50 to 60%, but it's still a great underlying demand. SolarEdge remains cautiously optimistic going into Q4 but expects strong demand heading into 2024. Interest rates in Europe remain relatively lower than in the United States, which coupled with higher electricity prices makes it more attractive for solar adoption. We know from last earnings report that Enphase also had better growth in Europe and Australia as well. But to be honest, despite them claiming that interest rates are lower in Europe than in the United States, the situation in Europe isn't that great. Now, on Wednesday, Enphase stock price was down 3.69%. That might be due to a lowered price target from Morgan Stanley from $234 to $159. Now, if you want a little preview of what Enphase does, the market they're playing in, wallet share, etc., I covered all of that in the first video that will be in the top right corner. Just don't want to repeat myself in this video to make it a bit too long. But a quick look at Enphase, the company right now, $16.72 billion in market cap, forward PE of 23.3 times. Year to date, it's down 53.57%. Now here you can see the comparison from today's price to earnings, EV to EBITDA, price to sales, and price to free cash flow. All of them besides the last one is the next 12 months. And then you can compare the mean in the last 5 years. And here you can clearly see that currently we are much lower than the mean in the last 5 years. If you look at PE, like I said, 23.3 times, the mean was closer to 50 times. EV to EBITDA, 17.6 times, mean closer to 40 times. Price to sales, 6.3 compared to 9.7. And then price to free cash flow, that's last 12 months, 19.3 compared to 85.7 times. So of course, you might say currently it is undervalued compared to its last 5 years. But currently it is also facing some pressures. We've seen slowdown in the last couple of quarters. Guidance wasn't great at all. Of course, with high interest rates, people are less inclined to take out loans to install these things at their houses, even though it makes sense in the long term, but most people are just not willing to pay the price right now. Of course, there is also an inventory issue. We've seen that with semiconductor companies, and now we're seeing this with these companies as well. It will take some time. As I said in the first video, I think short term, there will be some pressures on these types of companies and on these stocks as well. But for the long term, I think this company is going to be a winner. Now, how long will the pressure last in the short term? I don't know. I don't have a crystal ball. But long-term investors should take their time to build up their position. That's my opinion. I think listening to the next earnings call, what the guidance will be, what the feeling is going to be extremely crucial. Of course, we know that next quarter is going to be weak, but let's wait and see what the guidance will be. Maybe they already have some comments going into 2024. If that's more positive than expected, then the stock will probably go up. Now you might say, oh, but by the time I buy my shares, the stock will probably be up already 10, 15, maybe even more. Okay, so what? Would you rather buy beforehand and then risk having the stock go down 20%, like we've seen in the last couple of months actually? People thought, oh, 150, it has gone down already quite a lot. Let me buy right now because I think the risk is less. Well, guess what? It went down even more. So it's always better to wait and listen to see if maybe this is the point where we're going to see a little rebound in the business. Yes, the stock will react accordingly, but at least you have less risk when you will buy that stock. Because if you believe in the success of this company, then what does 10-15% matter? It doesn't really matter. Now, before I show you the clip from a month ago with regards to the graph, if you enjoy this type of videos, leave it a thumbs up. Would really appreciate that, and subscribe if you have not. We're very close to reaching 30,000 subscribers. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to follow me on X as well, trying to get monetized there. The stock since its peak has been crashing down quite a lot. It's still in a downtrend. So again, you can dollar cost average if you're in it already for a while. For those that want to open a position, still open maybe a tiny position, never go all in at once. Now I drew this line here, which is around $120 or so, because previously back in 2021 and 2022, January there, it was a support line. So again, you could wait. It's another 10-11% drop or so. Or if you think, look, the business right now, valuation right now, looks pretty good to me. So I'll open a tiny position, and then if it drops more, I'll just dollar cost average. So this is the current state of Enphase stock. And like I predicted, I know I'm a technical genius. I'm joking, I'm not a technical genius, but sometimes it is very good to look at the charts to see some technical stuff, whether it's support line, downtrend, uptrends, RSIs, you name it. It is useful, it doesn't always work out, but lately I found it more useful than in the past. As you can see, we are nearing, or we're extremely close to that line I drew before. So that was a support back in May 2021 and January 2022. It might be a support right now. If we can build a base around $120, $130 or so until we reach the next earnings report, I think that could be very healthy for the stock. Currently, we are nearing the oversold area. We're still not there, but we're getting closer. MACD is still bearish. And so I'll repeat myself again. You might buy the stock right now thinking it is already undervalued, the stock has been hit hard enough. But if history taught us a couple of things, is that even if stocks are undervalued, it doesn't really matter that much. In the short term, it can be undervalued and then the stock goes down another 10-20% or so. Why is that? Just sentiment. It's just sentiment. Amazon at 100 was undervalued. It went under $90. Same with Alphabet, same with Meta. Why did that happen? Just sentiment change. But then it's up. Well, Meta is up quite a lot, but Alphabet and Amazon are up more than 30-40% or so since then. That's because sentiment changed, the result changed, guidance changed. So maybe the same thing might happen with Enphase. But again, 120 might not be the bottom. It might well be the bottom. Remains to be seen, but act accordingly. Don't put all of your money into that stock right now because you think, oh, 120, it cannot go lower. First of all, the stock doesn't know you own it. The stock doesn't know you want to own it either. So it doesn't care, oh, this guy put all his money in this stock. Let me stop going down. That's not how it works. And lower can go lower and higher can go higher as well. So that will be it for this video. Quick update on Enphase and a bit on SolarEdge as well. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.